Yes, what's good, guys? So in today's episode, guys, I'm going to be teaching you a very simple strategy that you can apply to your trading system and gain consistency over the market. So if you are new around here, guys, make sure to subscribe and let's jump into the video. First things first, guys, you need to use a registered broker. The broker that I'm using is FXView. FXView has fast deposits, fast withdrawals, low commissions, low spreads, and also they're regulated in 4 countries to make sure that your money is safe, guys. So let's jump into the video. So traders, now for me to teach you this simple forex strategy, I'm going to be looking at USJPY, and then we're going to also be looking at the 4-hour candle. So guys, most of you know me, I don't love to trade on smaller time frames, and the reason for that is because the 98% of traders are trading on smaller time frames, meaning we are going to find too much noise on there. So I never want to trade where everyone is trading, guys. That's why I look out for higher time frames. So this simple strategy, guys, again, it relies around market structure. You need to know about the uptrend market, the downtrend market, and the sideways market. You need to know about all these things. They have to be on your fingertips. So right now, what you can see, traders, we're going to be marking out psychological zones. So this strategy is going to be, we're going to create a strategy out of psychological zones. For whoever doesn't know psychological zones, these are zones that act as support and resistance, as simple. This is what I'm trying to mean. Now what you see up here, you're just going to use lines, guys. So this is the zone that I'm talking about right up here. So you can see, guys, so we had price touch this zone here in June, the 28th of June, and then look what happens. Price comes back to this zone right here on Monday, and this was July. Now again, you see, we have price coming in a downtrend. So this is why I told you you need to know about market structure. So this is the downtrend market. As you can see, we have price forming lower lows and lower highs, lower lows and lower highs, until it came to this zone down right here. Then again, price is shooting up again, moving in an upward way. But this time around, price was giving us higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, until we had probably this must have been probably CPI or FOMC or probably NFP for price to push up to this zone right here, and then we had a bounce off. Now my main point of interest was this zone right here, but guys, surprisingly, I missed out on this trade. But sometimes when you miss out on trades, obviously God is always going to give you even more and more trades. Now traders, I want you to first note one thing. Anytime when you have a psychological zone like this, and then you have price dropping like this, and then you have price reversing, and you see price trying to approach your zone, I want you to know one thing. When you want to take a trade off that part, know one thing, that price is always going to go back to your psychological zone, but one way that price goes back, it's by news. That is just a trick that I've seen. It's not a trick, it's something that I've seen for quite some period of time. So you can see here, we had price push up with momentum, you see, to wipe out whoever was putting their stop loss here, you see, because everyone thought price was going to drop from here. So let me show you that everyone thought price was going to drop from. So everyone thought price is going to drop from this zone right here, because again, this zone right here is acting as our support here, then resistance here, again here. It's acting as our resistance. Now look what happens when price comes back here. Everyone thought that price is also going to just reject here. That's why price started dropping. Now everyone started selling and then putting their stop losses just here, again here, even up here. But that's why when price dropped and came back to this zone right here, it pushed up with momentum, taking out retail traders. And after, price started dropping again. So you can always, guys, you have to look out for the major news events and look out for psychological zones, because these psychological zones, these are zones that price is going to come to, and then you can make quick money off this. Now for me, my main point, since I missed out on my entry up here, guys, so I want to show you something very simple, guys. Market structure. So I missed out on my entry right up here. So I saw price started dropping. You see, price was currently at this zone right here. So we had price currently at this zone right here, at that big candle that I've just marked out. So I knew I had to take a trade, but you don't just have to trade anyhow in the forex market. You need to have facts that you're basing on, traders, and this is what I'm going to show you right now. So what I did was just mark out my trend line. So I marked out my trend line, guys. Remember, I'm on my 4-hour candle. I drew my trend line just like this. So why did I draw my trend line, guys? Because remember, price was currently at this black line that you're seeing, this black circle that I've drawn out right now. So I knew price is going to bounce off and go back up, or it's going to drop. So this is always what we want to look out for when price is approaching a trend line. You want to see price break your trend line and then retest it just like the way you see here, or you want to see price bounce off your trend line. Again, why did I anticipate that price it would probably bounce off? That's why you always have to have two anticipations in your head, either a bounce off or a breakthrough, because you see here price breaks here, price breaks here. So you also have to anticipate that price may either bounce off or breakthrough. Again, surprisingly, price breakthrough, as you can see right here, and then it pushed back up to retest this zone right here. So price was not just retesting this zone up here, but also that zone was acting as our resistance line, and then here it was more of a support zone, and then here it was more of a price broke through, but it came back and closed from this side, meaning this was also a resistance. Then when price broke our trend line, so it went back to retest. So I knew in my head it's only at one point that I'm going to take my trade, but obviously me, when I'm taking trades again, traders, I don't just take trades after seeing the retest. No, I'm going to show you why I don't do that. So you can see price pushed in here, we had a nice retest, and then you had this candle that looks like a spinning top, this candle, one candle. So let's zoom in so you guys can see it. So we had this one candle right here. So for me, I took my trade on the next candle, and I have to zoom into the smaller time frame so that you can be able to see which zone did I took my trade. But again guys, a small recap. Why did I take the trade? Because again, price had come to this zone right here, as you can see. So price came to this zone. So let's do this. Let's first draw to this zone right here. Nice and easy. So let's make it a box just like this. You can see traders. Nice. So you can see, so price came to this zone right here. Price came to this zone from here to up here. As you can see, it gave us a nice uptrend. Came back down here, then it went back to this zone right here, making this a resistance line, probably also psychological zone, because this is Euro JPY, and then also this is a 4-hour candle. Price drops back to this zone right here, it starts going back up, comes back down. As it's going up and down, it's giving us higher highs and higher lows. It pushes back into this zone right here, and then pushes back with much momentum to take out retail traders. Then it starts dropping again. Then for me, I was wondering, where can I take my trade? I was like, let me take my trade at the trend line break. As you can see right here, I took my trade at the trend line break, and then putting my stop loss above 30 pips, and then targeting. I put 3 targets. I put one target was already hit, another target was at this level zone here, and then another target was this zone here, which also is acting as our psychological zone, because price probably will come back to this zone right here, you know, as long as you understand market structure, guys. So now let's zoom into the smaller time frame. So guys, I used the 15 minutes time frame to take my trade. I repeat, I used the 15 minutes time frame to take my trade. So let's remove this big line. So traders, this is where I took my trade. I took my trade at this, you see this blue line here, this is why I took my trade. Reason why, again, every time when you have aggressive selling in the market, obviously this is a smaller time frame, but also demand and supply works also in smaller time frames. So we had aggressive candles, 1, 2, 3, making this blue candle our supply zone. So meaning when price ever comes back to this zone, we are going to see price dropping. So when price came back to this zone, this is when we had the other 4-hour candle start opening. So what I did, I set my sell limit at this point up here. So when price opened, this other candle opened, price started shooting back up, and it executed my trade, and this started coming down. So I set my stop loss exactly at this point right here. From here I measured 30 pips, and I put my stop loss somewhere there, which was only 30 pips, guys. And now currently price has dropped more than 70 pips. 70 pips, guys. So let me zoom into the 4-hour candle so that you can see clearly what candle did I draw on my entry. Again, guys, when I zoom in like this, you can see I took my trade on the next candle that I've just showed you. You see this candle right here, the second candle. I don't take my trade on the first candle, I take my trade on the second candle. So I had a nice entry. It was a sniper entry because price started dropping down. Again, anytime when you see demand and supply, price, when it comes to those zones, it's going to drop aggressively, guys. But again, I derived this strategy from all these psychological zones, you know, from all the psychological zones. Because guys, again, the reason why I took the trade was very simple, guys. Markets were giving us similar structures, as you can see right here. Here we have an uptrend, price comes up here, comes back up here. You can even see price was literally trying to range or trade in a fixed zone, trying to give us ranging market vibes, you know. Probably when you zoom into the daily time frame, you're going to say that this is more of a ranging market, and I'll prove to you that, guys. So traders, as you can see, this is our daily time frame. You can see So price was giving us the vibes of a ranging market. You can see price was up here, comes back down here, comes back up here. So literally I took my sell trade because price was giving me those vibes. But again, I've derived my strategy from the psychological zones. I missed out on a trade here, right here. So I told you guys, when price comes back to your psychological zones, wait for price to tell you that it's going to drop. Wait for price to tell that it's going to drop. As you can see right here, what we had there is the inside candle. This is the blue. You can see the big blue one is a big blue candle, which is a buy candle momentum. Then the red one is a small one. So anytime when you see this is a bearish. So anytime when you see this bearish candle, guys, price is telling you that it's going to drop. That's why you see a pushback in here. So this would be a nice sell trade from the up here. You would sell from here. But again, if you miss out on this trade, guys, always look out for lines like this. So you can draw lines and then you can see trend line breaks, guys. But this is a simple one, guys. I've explained how you can take a trade from down here when we are seeing momentum, and then we have a zone like this. Price is always going to approach those zones and then drop off, guys. As simple as that, guys. I took my trade, putting my stop loss. So guys, I took my trade like this. As you can see, I had a tight stop loss, a big take profit. You never want to, guys, you never want to eat food for a rabbit and then you put out waste for an elephant. You should always aim for big profits and always let your stop losses be small, guys. So as you can see, this has been a very small strategy. I applied it. I made $800, which is not that much, but again, it's money, guys. The goal is to just stay consistently. So if I can use this strategy to be consistent in the market, I can get an edge over the markets, guys. So if you've enjoyed this video, guys, make sure to subscribe, turn on the notification bell so that you never miss out whenever I post a video, guys. I hope you have enjoyed this video. I'll see you in my next. Peace.